Good evening. It's the 18th of January. I'm going to recap my trades for today. Decent green day, not a very good day for trading. Let me just go to trading view and we'll go and look at some levels which we set up earlier. So in my live video today we were talking about watching a few levels, and in particularly I was watching, I want to zoom out so we can see what we're looking at. So one of the levels I was really watching was down here, which was 47.60, and that was only because it's a level of confluence on the top of this pivot. Last time we got down there we had a big reaction, both going up to it and back down to it, and it was a significant area here, and then yesterday we came into that area as well. So that's an area I was watching down there, and I did say if we get down there it will be a second touch and a second bounce to that area, so it won't be as effective as the first. And I was also watching yesterday's low as well, this area here, 47.44, 47.45. They were my two bounce areas. I had a couple of rejection levels, in fact one's just come up already, and I was also watching for the break and retest of the pre-market high, which which would have been that level there. Wasn't marked up. So the morning was very uneventful. We were just doing nothing, going sideways. Look at this. Look at these candles. Totally indecision candles. Big tails, body in the middle. Tails either side, body in the middle. Tails either side, body in the middle. And it was almost untradeable. And in fact, it was untradeable. I wasn't interested in taking a trade at all. I wanted to see it break out of that area or break down of the pre-market low, this area here. So they were the two main areas I was watching for, really. Probably this area here was really the main area, probably with the bounce. However, it does lead me into my trade, because I was watching the pre-market low area, which is around about here. Happens to be the same level as this channel I drew yesterday. If you recall, I linked up these pivots down here and then cloned the line, and it fit in quite well on this channel. So that's kind of like where we were watching it trade. Yesterday it broke the structure of this channel. So if you remember in my live video yesterday, I said sometimes I look at these channels and I like to see what half of the channel we're seeing most of the action in, and most of the action yesterday was in the bottom half, and it did actually break the channel. But then it came back, put in this probably a little head and shoulders pattern, and in yesterday's pre-market, that was yesterday's trading, and in the pre-market we kind of just went sideways for a bit, and then we started pushing up and we broke the channel again. So we broke the structure twice, yesterday and today. So I was kind of keeping an eye on that area for potential pullback into a level I had, which I'll go into that level in a second, which is basically the bottom of that candle, bottom of these candles. Also I was keeping an eye on the trend line here. So I'll go into the 5-minute chart and I'll show you my trades. The first one was a losing trade. Here. So I stayed away from all of this chop fest here. I wasn't interested in that at all. Could have played the channel, the range, but it wasn't of interest to me. It wasn't what I trade. I was only waiting for my levels to come in, and eventually my level did come in, and I went long there. So that's my entry point. In fact, I was long on the 200 moving average purple line. However, it was after 12, and there's a few reasons. I'll go into the reasons why I went long. I didn't really want to trade after 11:30, 12 o'clock, and I was just getting ready to pack away, and then we saw this big move down. I was keeping an eye on it. I saw this big volume bar come in as well. I think there was a Fed speaker at 12 as well. Fed Bostic, I think. I don't know what he said, but obviously the market didn't like it initially. It's recovered now. So I waited. It came in and triggered my level, and I didn't take it there. I waited for it to come back up, and I got it on that 200 moving average. So my first probably mistake was my stop was below there, and it stayed below there, and I was targeting the VWAP. That was my first exit, and I don't know why. I saw it come up. I had one contract. I think I may have got greedy. Came up, pulled back, came up to the VWAP, and I refused to take the profit. I should have just taken it off the table there. And look at that. The white line is my VWAP, and it's absolutely spot on. And I don't know why I didn't take it. To be honest, I was distracted at the same time as well. I was just talking to a couple of friends about you know, stuff I got on next week, and I saw it come in. Even when it pulled back, I thought, you know what, I'll wait, maybe it's going to break it. But I knew right away, my gut feeling was to just take it there, and I didn't. It came all the way back, which is a bit annoying. So I didn't stop out because my stop's always a few ticks below. I leave my stop a few ticks below the low, and then I added back here again, and it all looked good. It pulled all the way up, and I was in profit. My target was still up here as well, and so I was in double the contract, 2 contracts at this point, and then it was just gone 5:30 here in the UK, and I went off and had dinner with my family, and I put my protective stop in, which was just below. Not rewind. My protective stop was there, and I put some OCO orders in. So my OCO order was to trigger the first contract there and cancel one of the stops here, and then there was another stop there which I wanted to catch the runner. So basically the OCO would have taken it out, and if I dropped below here, it would have taken out both the stops and taken out the OCO would have taken out that one as well. So that's what I normally do when I'm not in front of my machine. I put my protected stops in place, but I use it as an OCO order. So I put a stop in there and I put a limit order in here, so that's a take profit. So if that triggers, or that it cancels that one, and if that triggers, the OCO cancels that one. So it's quite important to do that. But because I had 2 contracts, I wanted to keep a runner. I had the OCO set up for that one, so that's that one. Those 2 linked together, and I just set another stop loss there. And so I didn't set an OCO, just a stop loss, which is a stop order. And as you can see, it came down, broke through that area, which is a bit annoying. And I'll explain why I was confident it was going to push up, and I'll explain why I got back in again. But I stopped out. It wasn't a big loss, a small loss, because I kept my stops quite tight, and I added back down here. So that stop out was basically a quarter of an hour stop out on that second contract, and probably about half an hour, not even that. It was minimal. It was unavoidable. It was avoidable because I should have taken profit up there, and maybe I could have added there for another little scalp. But that was it. I was done. So I was out of that trade. So I came back and I was watching the price action, looking at the volume. So the reason I got interested in this was because we had this big wide range candle on high volume, and even though there's news signal, you know, that was showing that there's lots of sellers around, and then we started seeing decline in volume here. So decline in volume here. So there's no real follow through with the sellers, and so that's the reason I went long, and I was happy to keep the long, and that's why even when it came back, we were on that one. I saw a smaller volume candle, and I was confident it was going to push up, and so but it didn't. It stopped me out, and then here again I saw looked like ending volume above average volume. And importantly, we had this bottom tail candle, which is normally a good sign that we've got strength back in the market, back in that area of the market, and it's on a channel as well. The top of that channel I just showed you in the hourly chart. So all those kind of are lined up, and I just went in. I got 2 contracts. In fact, I had 1 contract there, and I was looking for an add. And when it came back down again, I added again there, and that's it. I believe that's what I did. My first exit was VWAP. My second exit was this area of resistance just there. So 2 exits, 1 there and 1 there. And you know, my idea was right because it's exactly what it's done, but my execution was a bit out. You know, I was about an hour and a half too early on this trade, but the idea was there, probably about an hour early. So I was expecting, because when I saw the bottom tails there, and we saw volume on the green candles, I was confident, and a double bottom as well. I was confident we was going to see the move up. But it still had 1 leg down to make, and then we saw the move up. What could I have done better? Maybe I probably should have walked after 12 o'clock. So 12 o'clock, I should have not. This is my trading time here. I should have just been trading there, and I should have walked away at that point. But I didn't walk, and I did play my levels. You know, my levels are important to me, and it triggered my level. So that's what got me interested, and I was only interested in this trade because this level triggered as well. Because like I said, these levels are more of an indicator that something's going to happen in that area. It's a zone I'm watching. So that's why I was waiting for confirmation. And am I disappointed that I got out there on my last contract? a little because I got out. I saw in the level 2 there was a lot. So there's 900 orders I think up here. Lots and lots of sellers. As you know, for futures quite a lot. And in fact, I was watching it on Bookmap as well. Let's just bring it down. It's probably a bit late now. It's 4,800. Yeah, you can't see it. I was hoping to see the historic bit. 4,800. We broke over. That's the area there we broke over. And you can see it. There's quite heavy area of sellers. But we need to go back a bit further. And it doesn't rewind on here. So we can't rewind the live YouTube Bookmap, which I messaged him today asking whether they could add ability to rewind the live stream, because you can turn that off or turn it on, but maybe they turned it off for a reason. So anyway, going back, my out was there. You can see it was a significant area, that area, because we pulled back down into that area. Maybe that should have been my ad. Maybe that should have been an ad, and I shouldn't have even got out. And one thing I'm trying to do is hold my runners as long as I can. And one thing I didn't do was trail this. I got out, to be fair, I would have got out there anyway, because it broke that area. In fact, my out would have been in the same place, because it came back down to there. But the point is, I didn't trail this 8 moving average on the 5-minute chart. And you can see it poked through, it didn't close below. So it hasn't closed below the 8, still hasn't. So I should still really be in it, really. So I'm working on that side. That's one of the areas of the trading I'm working on, is holding a runner longer, just to try and, even though I got, you know, I'm being critical here, I got in at the low of the day and I got out there. That's not a bad move. That's, you know, that's the meat of the move, really. If you think of it like a fish, you've got the tail, you've got the body, and you've got the head on top and the eye. And I got the meat of the move, and this is the bit the fishermen throw back, the heads and the tails. But there's always room for improvement, and knowing these signs and learning these signs is what I'm trying to get better at. Because that's another, you know, that was a decent trade up to there, but that's another third. I could have got another third profit today if I still stayed in and just trailed the 8. So I'm going to put a note on my desk now just to watch the 8 on the 5-minute average, because this happened a few times. A couple of days ago I got out as well. And even if we use the 20 moving average as an out, if it touches it or closes below it, then that could be an out, and I would have been no better off if we do break the 8 moving average, because that's where I got out anyway. That's my original out, and I could have just used this 20 moving average, this blue line, as my guide as well. Anyway, unfortunately I'll never be happy even on good green days. Decent green day today as well. I'm trading 14 Apex accounts, and 14 Apex accounts. And so all you need is a little tiny bit of profit in each of those accounts, and times that by 14, that's a decent green day. And having 14 accounts is better than having one big account, because my risk is being spread out over the 14 accounts, not over the one account. So with Apex you need to pass an eval, and you have a drawdown as well. So if I were to buy 14 MES contracts, or 28, because I had 2 at one point on one account, just one little pullback would have wiped out the drawdown and wiped out the eval account. So by spreading it out over 14 accounts, or 20 accounts you can get up to, you can then allow yourself to have a bit of a pullback, and you won't max out your account. So you only max out a little tiny portion of your account. But if you have green days, you have decent green days, but you can, if you don't manage your risk, have bad red days. And last year my risk management wasn't great. This year I'm hoping it'll be much better, and it has already been much better. Even today when I stopped out, I had a very tight stop. Didn't really want to take the revenge trade. I thought about it and I waited, and it came back down here. And I did think at the time, it's this revenge trade and getting back in. But you know, the levels lined up. We had the top of the, you know, this area of consolidation, the pre-market area of confluence, bottom of the channel as well. I was watching the volume, ending volume there, and it kind of lined up. It was not my best trade, but it was a higher risk play, because it's after midday, and generally after midday I don't do very well, so that's why I was very reluctant to really trade after midday. But it seems to be doing, and look at how strong we're still pushing up now, yet to break the 8 moving average or close below it. So that's it. Decent green day. I've only had 2 red days this month. All the rest have been green. So the levels, yet again, despite me stopping out, that did work, and I was just slow. I should have taken it off there, and that was my original goal. Level worked again today. Look how spot on that was, absolutely spot on. And then even this trend line I drew in was pretty decent, and you can still use the level even if it breaks through, comes back up. You can look for a break and retest, or you can use it as a, if it's below this level, not to take it, if it's above that and the 200 moving average, and you can add that as part of your confirmation to get into the trade. That's it really. I've not looked at any other stocks today. Qs looks like it's rolling over, or Nasdaq looks like it's starting to get tired. That's the hourly, but on the 5 minute, maybe it's starting to curve over now, double top, but that's been pretty strong today as well. And if we end up where we are, it means we would end on a green day. You know, the Nasdaq and the MES will be a green day today, not a red day like it was yesterday. Okay, that's pretty much it. If you are interested in Apex accounts, check out the link below, because that gives you a discount and you can get up to 80%. I think there's an 80% off sale at the moment, and sometimes they have 90% off, sometimes 71% off. So, but even when they don't have sales, the code below will give you, I think it's at least 50% off. But you always get a good deal with the code anyway. So don't just buy the account, use the code. Hopefully use the one below, because I get a little kickback from that as well. Okay, thank you for watching, and have a good day.